Thank you very much, and welcome everyone. My name is Magaki Victor, the COO. I run the operations, including sales, and making sure that you guys are well taken care of in terms of customer experience. So before I also go to questions, also just want to add to what Anna said. Apart from Kenya, we also in other countries, that is Uganda. So if you have businesses in Uganda, Zambia, Mauritius, and even SA, South Africa, you can still use our POS, and even Tanzania, so the East African region. And we also partnered with the same Digitax, which Tuku will talk about when we give him a chance to introduce himself, and so that you're also able to be compliant in terms of tax in all those countries. The countries that we have footprints in already, but we intend by the end of the year to have expanded beyond Africa and its other wings.
I think what we can do now, and maybe Victor, with your permission, is we could go straight into the Q&A. So I'll start with the penalties and come to the benefits. So with respect to the penalties, as a business issuing invoices to your customers, as KRA embark on enforcement, if you're found to be issuing invoices that are not either TIMS or eTIMS compliant, meaning you either have the physical device, or because you didn't have the physical device, you're then using eTIMS, your penalty is basically twice the amount of the tax invoice due. So you can imagine if the tax due on those invoices is 10, for example, and each of those invoices, the tax obligation is 10,000 shillings, you'll basically be paying a penalty of 200,000 shillings on top of the actual tax due. So that's the first risk from a business issuing invoices. For the businesses here that deal with other businesses, or even for yourselves as you procure items or services from your suppliers, you won't be able to claim those expenses unless they're supported by either an eTIMS invoice, an eTIMS generated invoice, or an invoice that was generated via the TIMS devices. So those are the penalties that exist currently. Some of the benefits of being on eTIMS is, okay, obviously you avoid paying those penalties. Two, by this partnership with Uzapoint and by way of technology, what we basically enable businesses to do is have a real-time grasp and feel of their tax obligations. So in as much as Uzapoint is helping you run your operations, you now also have the optionality of, at any given point in time, getting a sense of what your actual tax obligation might be. And that can be quite helpful because, as most of us are here in business, working capital is critical to ensuring that your businesses run sustainably. So it allows you to then plan for any tax liability obligation that's due at any given point in time, or it allows you to then start sourcing for alternative means of capital to ensure your businesses run smoothly. So that's one benefit, is just having that visibility. I think the other benefit of having eTIMS is, I already mentioned, to avoid paying those penalties. And thirdly, I think it just gives businesses ultimately peace of mind, because we operate in quite an intense environment, especially with the taxman, and you just also always want to be on the right side of compliance. And the earlier you're able to do it, the better. One of the other things we've been able to do at Digitax, and it's something that is available to Uzapoint, is we're able to run backlog of invoices. So say you're a business and you've been thinking about compliance, and now is the time you actually want to be compliant, and maybe you have a list of invoices from January to date that you'd want to be eTIMS compliant. Maybe your customers are also pushing for invoices for transactions that they basically interacted with you previously. That optionality exists, whereby if you have thousands, tens of thousands, hundreds, tens of invoices, we have the capabilities in place to ensure that we can run that backlog. So as a business, in as much as you might be complying in Q3 of 2024, so basically in August, you'll still be able to be compliant for your invoices that were issued all the way from January to date. So we basically provide that comfort and assurance to businesses that, through this eTIMS compliance, regardless of when you want to be compliant, just as long as it's before December 31st, you can be compliant as a business. Integrating, or rather getting started with eTIMS is quite a straightforward process. And obviously there's information that the Uzapoint team here that they can share with you as a wider audience. But there's essentially two parts to it. One is onboarding on Digitax, which the Uzapoint team can manage on your behalf. And then the other would be onboarding on eTIMS. And the reason for this is because KRA have a manual process right now, whereby they want to be sure that if Thuku is the one who is a director at Digitax, he's the one who's actually consented to Digitax actually signing up for eTIMS, because what the government, or rather what KRA want to be sure of, is that it's an authorized and recognized signatory by way of a CR12 on iTax, that whoever has basically provided this information on behalf of the business has actually consented to them signing up on eTIMS. So there are sort of two parts to it. One is that we provide you with some information that is required to be entered on KRA's portal. So KRA have a portal where you go and fill in information on your business, you enter your KRA PIN number, you upload IDs, back and front images of the director. If you have a business that has multiple directors, it could be a single director, but always makes sense to validate who's the director at iTax and ensure you use that information, because that's what KRA will counter check with, to ensure that whatever you've uploaded is what they have on file. And then once that account is approved by KRA and you enter some information that we provide you with, you basically then be ready to go. What we've seen is that could take as little as 24 hours up to maybe 3 days or 4 days, assuming you've not signed up on eTIMS before. However, if you've signed up on eTIMS by way of maybe eCitizen or maybe the free KRA options, there's a change of solution process that will basically walk you through, which will basically ensure that you move from whatever option you're using to Digitax, such that you can consume Digitax within Uzapoint. Just to be clear, Digitax is a distinct entity from Uzapoint, but what we've tried to do to ensure that you, as a business, you don't have to hop from different platforms, we've just basically integrated with Uzapoint. That way you can just continue to use Uzapoint to generate eTIMS invoices. So that's how the three different stakeholders, Uzapoint, Digitax, and eTIMS, fit into the actual onboarding process. So actually, we've already done the technical work. That's completed. I think now it's just a matter of onboarding you as the audience. The integration work is already completed, and what that basically means for you as a business is, since you already have your own unique accounts with Uzapoint, the setup is more or less the same. So as each of you set up your accounts with Uzapoint, Digitax, and eTIMS, those transactions will be specific to the KRA PIN that is linked to the KRA PIN that Uzapoint have set up the POS for. So we silo every customer's transaction history. That way, Anne, for example, if she had a profile, her data will never commingle with what Victor is doing. So they're very separate. They run independently, but it's still through the Uzapoint platform. So that's actually ready, and it's part of the reason why we're having this call today, is just to disseminate information on eTIMS, and to kick off with several of you with respect to your eTIMS compliance journey through Uzapoint. The first one, I think we might have answered, but essentially, there's a circular that was shared by the Kenya Revenue Authority that we can also share with you. That just basically stipulated that for a business to have tax deductible expenses, they need to have been issued by either eTIMS or TIMS. So TIMS, just once again, used to focus primarily on VAT obligated businesses. And VAT, independent of what might have come out of the Finance Bill 2024, right now, based on existing laws that we're running with, a business basically qualifies for VAT once they hit a cumulative turnover threshold of 5 million shillings. So that cumulative threshold could happen in your first month of business. It could happen in your fourth year of business. So basically, when that threshold is hit, that's when you basically need to then go and register for VAT as an obligation. So based on that, the businesses that had qualified for that, or there's some businesses, for example, right off the bat, that actually register for VAT as they begin operations. So they would then previously would have been required to procure those TIMS devices. So basically, a business would need to have an invoice issued either by TIMS or eTIMS for them to be tax deductible. So that's basically, I would say, the governing policy right now that exists in the market. And for all of us as businesses, we basically just need to ensure that we collect those invoices. And then on the flip side is for businesses issuing invoices, they need to be TIMS or TIMS compliant to avoid paying those penalties. So that's basically the compliance angle of your question, Anne. I think your second question was around, so I'll talk about documentation with respect to signing up, and then I'll talk about documentation from the respect of what an TIMS compliant invoice would look like. So for signing up, it's pretty straightforward. You basically just need, or rather the first part is to sign up on TIMS, where you basically enter your carrier PIN. What happens after that is you'll then be sent a one-time PIN to the registered mobile number for that business. Once you enter that PIN, you'll then be able to have an account established for your business. Once you then sign in, you'll then be able to choose the specific integration that you'd want to work with. And this is quite important because KRA basically want each taxpayer to operate one specific TIMS option. So you could be working with Digitax, you could be working with the Citizen. We have heard of examples of farmers, for example, that use the USSD option. So at any given point in time, a business can only be on one option. And once that's done, KRA will basically then approve the account. It's a manual process that takes 24 hours to maybe 5 days maximum. And with that, you'll be up and running. So the only documentation required really is just the front and back side of your ID. The rest is basically just information that you'll type in using your laptop or computer, for example. So that's the documentation that's required to sign up on TIMS. For the actual then receipt that's generated by KRA, KRA have actually stipulated what an TIMS compliant or a TIMS compliant invoice looks like. So it basically has the KRA PIN of the buyer, if they would wish to go and claim it as an expense, the KRA PIN of the seller. That one is mandatory for any business that's selling. The items that were sold, so whether this is physical goods, so if you're trading, or services, you basically need to list those as items that you sell, because what happens with TIMS is you can only sell what KRA have recognized you do as a business. So if you sell services, you have to list those services. And again, through the integration with Uzapoint, if you have thousands of products, for example, those can all be bulk uploaded in one go. So there's no need to be too concerned about that. But basically, there needs to be visibility on the items that you sell. And if the physical goods, the quantities also need to be captured. And then basically, once the sale is actually made, it will capture the items that are sold, whether it's a service or a good, the quantity and the price. A tax table is mandatory because obviously, depending on where your business is registered or how you're structured, there are different tax classes. So there are obviously those businesses that are obligated to pay the 16% VAT. There's some that are exempt, there's some that are zero rated. So depending on where you're set up, if it's an SEZ, EPZ, or just a traditional normal business, you'd have to indicate at the time of creating the item which tax class it falls into. And then obviously the main validator for these invoices that are generated is the QR code. So it's basically the code that you can scan with your phone, and it will take you to KRA's website, and it will just basically give you textual information to show that this information has actually been transmitted to KRA. And this is the information from a textual perspective to show that this is the seller, the buyer, the items, the total tax due, and the net amount that the supplier, the seller made for that particular transaction. So that's what I would say from a documentation perspective would look like holistically, both from the onboarding and actually when you start transacting. TIMS. Okay, I can talk about it from maybe a Digitax perspective. Because at the end of the day, KRA basically have this data, although the taxpayer actually owns this information. So from a Digitax perspective, what we've done is we've basically been licensed by the Office of the Data Protection Commissioner as a data controller and data licenser. I believe Uzapoint have the same licenses as well. And what this basically means is we have data protection by design, and we built this in in terms of how we firstly handle customers' data as we onboard them, because we get access to some sensitive data. It could be a CR12 that has information on the directors. It could be directors' ID details. It could be directors' numbers, for example, in the event that numbers need to be changed on ITAC, so we need to follow up on a customer's behalf. So we have our own privacy policies in place. Actually, ours are actually publicly available that basically govern the data that is required and how we use it. The data that is used by Digitax is data that has been stipulated by KRA in terms of what is required for an invoice. So it's nothing over and above KRA's requirements. What we do is we basically just act as a pipe, then pass this information to the Kenya Revenue Authority. The reason we exist is because we simplify the process, and we basically have built-in features. One of the things that we've tried to do with Digitax and expose this to Uzapoint as well is we built real-time transaction notification status updates, and this is quite important because at the point of transacting, for example, if KRA system is down and KRA happen to do a spot check, rather than you being penalized unnecessarily for factors beyond your control, you can actually demonstrate that, look, this is the actual status of this transaction or these 10 or thousands of transactions, and they can actually call the back office and verify that the system is actually down. So we've basically thought through some of these redundancies that make the service that we offer quite valuable to our businesses, because at the end of the day, what we're trying to solve, or rather what we're trying to make easier is the tax compliance process without businesses facing unnecessary headaches and penalties for factors beyond their control. So for us, we basically silo partners' data, customers' data as well, which basically means if Brian Karanja is using Uzapoint is using Digitax through Uzapoint to be TIMS compliant, his information will never interact with John Washira, for example. So each customer's data is siloed and is specific to their particular profile and career pin. And we also have remedies in place in case our customers, or rather Uzapoint customers, who would want to have conversations with us around the actual tax data. Although KRA stipulate how long this data needs to be stored for, it's several years. Although this information at the end of the day is still transmitted to them. So I think, answer your question, this data belongs to the taxpayer, but for purposes of taxes, KRA also have visibility on it. And then we have our frameworks as both Uzapoint and Digitax that govern what we do with this data. So that's where we come from a privacy policy perspective. It's actually quite simple. I mean, just to give, I think, the audience an example, we've worked with some insurance companies that process more than 10,000 invoices per day. And the beauty with what we've done, I think, as both Uzapoint and Digitax, is we have systems that can auto scale. And what that basically means is, as volumes increase, the system also increases to handle that traffic. And as volumes decrease, they also decrease as well. So quite elastic to ensure we're able to handle those volumes. One of the things we've been able to do as Digitax is, in the event that ETMs is unavailable, we're able to queue the transactions and still process them. You'll still be able to get a QR code, meaning that your customers that need those receipts will still be able to access them. What would basically happen is, at the point of them scanning the QR code, the transaction might not necessarily be completed because ETMs is unavailable. But if they happen to do it several hours later, or maybe the following day, for example, depending on how long ETMs is unavailable for, and they scan the QR code, they'll see that the final information, which is basically more or less what they have on the actual physical receipt, has been captured by ETMs. So we've built our system to handle basically 1 million transactions per hour, and our system, or our operations, basically run 24/7. So for a business that even operates throughout the night, you shouldn't have an issue with respect to actually processing these ETMs invoices. Provided Uzapoint send all these invoices, they'll be processed for you. I think that's the long and short of it. So nothing happens to the integration. That remains constant. What would basically happen is the transaction has not been posted to KRA. So if a business if a customer to scan the QR code, that information won't appear on ETMs just yet until the system is up and running, which I think for those who've interacted with TIMS before, it's something you've experienced whereby you go and purchase something and then 2 or 3 days later, I think that happens with supermarkets like Quickmart, for example. You'll then be able to see the information on KRA's site, on iTax. So from an integration perspective, nothing happens. For the business itself, I think support can have several layers. The first thing is, through the transaction status updates that we provide, and we do this per transaction. And this is something that Uzapoint have access to. They can basically stipulate, the status of each transaction at any given point in time. So for you as business owners or people involved in the operations of the business, you then be able to have that real-time visibility of the different transactions of the various, the different statuses of the different transactions. From our side, what we've been able to do, and in fact, TIMS has been quite slow the last 2 days or so in terms of processing transactions. We immediately send out, disseminate this information to our customers or our partners. In this case, it would be directly to you as Uzapoint to then disseminate to your customers. What we'll then be able to do is basically queue all these transactions and process them depending on the speed that KRA systems are able to handle. We've seen sometimes transactions take about 2 minutes to 4 minutes per transaction to be uploaded. So what this might necessitate is queuing and processing over several days. There's a hospital we worked with, for example, that had 160,000 invoices that we processed, I think, over 8 days or so. And the reason for doing this is because what we've seen is sometimes TIMS is not overwhelmed in the evenings. So we basically have a team that's basically managing this process throughout the night, sometimes over the weekend, just to ensure that these transactions are actually posted. So for your customers, they'll still be able to print the receipts with the QR codes. I think that's the main point that I want to emphasize, that this will not hamper the operations. What it just means is that the actual validation of the transaction will happen at a later stage. So firstly, the difference between TIMS and eTIMS is TIMS was primarily focused on VAT obligated businesses, and it was hardware driven. So you had to go and buy a physical device, and there are different types of devices. They had the handheld devices where you go and punch in the numbers and manually, and a receipt is produced. And that was mostly used by businesses that don't really have high transaction volumes. And then there was the Type-C device that integrated with your existing ERP or software. That way, as you're transacting, you can basically just generate the tax invoices. But eTIMS is purely software driven. The whole premise behind eTIMS was I think intriguing about TIMS was that if you're a business with multiple branches, each branch had to then buy a physical device, which meant the cost of compliance could be quite high, because as you expand your business, you're basically just buying more devices. There's some businesses we know that spend tens of millions buying those devices just because of how big they are. So basically, to then lower the cost of compliance, they needed to then explore different ways of doing this, and software was one of the ways identified to lower the cost of compliance, which is why you'll see that KRA has the free options that they provide, which are more relevant to, I would say, very small, nano to micro businesses that maybe have an invoice a month, an invoice every 3 months. By the time you're actually using a POS like Uzapoint, you're more or less a more established SME, maybe of high transaction volumes or high transaction values. So that's where eTIMS comes in, is basically to see, how for people who already have the existing systems. So in this instance, Uzapoint to have 5,000 customers. Rather than all 5,000 customers going and buying devices, how do we ensure that, one integration allows these 5,000 customers to be eTIMS compliant in 2 weeks at a fraction of the cost of actually buying a physical device? So that's basically the difference between TIMS and eTIMS. eTIMS focuses both on VAT obligated and non-VAT obligated, so basically all taxpayers in the country. And what this essentially means is, for a business, if you haven't hit the threshold of 5 million in turnover, you still need to be on eTIMS. Previously, what happened before is a lot of these businesses, because they weren't on any of these systems, and maybe because they dealt with businesses that weren't too strict on compliance, they were basically not on the taxman's radar, which basically means that KRA had to squeeze more revenue out of the existing tax base. And I'm sure we've all felt that by way of, whether it's on the pay slip from payee, whether it's at the gas, at the petrol station, at the shops, etc. So to broaden the tax base, that's where TIMS comes in, because TIMS looks at onboarding, say, your farmer dealing with sugarcane in Western Kenya or maize in the Rift Valley. It looks at somebody who has a small retail shop on Moy Avenue, for example, all the way to the larger enterprises. If you have a TIMS device, do you need to be on eTIMS? For now, no. You can continue to use the TIMS or ETR device that you have. Although one of the challenges that we've heard about from some of the customers we've served is the fact that the support for the TIMS devices is not that great. Meaning, as a business, you're either paying frequently to have the devices repaired. You still have to, keep buying paper. You have to charge the devices. There's quite a bit of friction when it comes to actually dealing with the devices. And what some businesses are saying is, look, this thing is not the most efficient way for my operation. Is there a way I can just, have a printer, use my current system, and issue eTIMS invoices, or rather issue tax compliant invoices? So some customers are naturally just transitioning from TIMS to eTIMS. Although it's not mandatory to do that right now. It's just if you feel that TIMS has been inefficient for your business, then you basically then need to move to eTIMS. One of the other things just to mention is, yes, you might have had a business that bought the ETR or the TIMS device before 1st September 2023. So in as much as you might be expanding your business, for that particular branch, you won't be able to buy a TIMS device because now the government has basically mandated everybody to switch over to eTIMS. So as a business, you might find you're then running two systems. You're running TIMS and eTIMS. So because eTIMS is more or less going to be the future way of government, just having this visibility on transactions that businesses are doing, then you can make that business decision to then just transition to eTIMS fully. What we have tried to do is automate that process to a certain extent. Unfortunately, the list, to your point, is actually quite long. But what we've tried to do is, at least from the point of uploading items, is you could, or Uzapoint or us, depending on how you want to move this conversation forward, you basically just type in more or less maybe the service or good that you're trading. And what the system then does is to give you, it will basically shortlist the most relevant codes, item classification code that's relevant to your specific service or good. So that's one of the things that we've done just to try and make the process a lot more simple. So you can do it either directly on eTIMS or through the integration we have with Uzapoint. That it can basically happen through that integration.
Okay.
So maybe the one you're talking about is, I'm imagining you've gone to KRA's portal directly. Well, maybe in the future, if we expand the services that we offer, but unfortunately for now, what our core business is basically around onboarding customers onto eTIMS and basically helping them with their transactions. So for us, it's more about the transmission of the transaction data. We don't actually deal with the payments or settlements of taxes, or the filing or tax audits or tax disputes. Although what we've been able to do through the relationships we've built with KRA is, through forums such as these, is invite them into the room, have them address taxpayers' questions. Eventually, one of the things I foresee us doing with Uzapoint is, aggregating the FAQs that the audience have. If we're not able to address them directly, we have our own tax experts who we can also invite regularly to webinars like this, or escalate those questions to KRA to then get feedback, to then now share this with Uzapoint's customers. So that's for now the scope of eTIMS and support that we provide. Yeah, if you're the seller, yes, it's mandatory. So the KRA stipulates the mandatory requirements for an eTIMS invoice. So if you're selling a business, your KRA PIN is mandatory. For your customer, it's optional. You might be in B2C, for example. whereby your customer is the end consumer. They don't necessarily need to claim that expense. But that end consumer, for example, could be a consultant. So maybe they need to claim that expense because they'll need to file taxes at the end of the year. So the seller's PIN is mandatory. Buyer's PIN is optional for B2C, but it's mandatory for B2B because they need to claim it as an expense. The items being sold are mandatory, the quantities, the unit prices, the tax classes for each particular product, and then the time and date of the activity and the QR code. So that's basically more or less what's standardized for the sales invoice, mandatory when adding products. For physical goods, it is just because one of the things that happened previously was what Kerry called the missing trader phenomena, where I could have multiple businesses that are all trading with each other, but there's no actual exchange of goods, and it's mostly for tax evasion purposes. So one of the things, and is a mandatory requirement with TIMS, is when you're uploading the stock, is to include the quantity. Because at any given point in time, if Kerry happened to do an enforcement check, let's say, for example, maybe your business sells maybe good food stuff. I don't know, maybe Royco, for example. So maybe you have 100 containers of Royco in stock, and based on your record that you have through Uzapoint, and also with TIMS, it shows that you sold 50 of them. Kerry might decide to come and say, okay, show us the other 50 containers of Royco. I'm not speaking on behalf of Kerry. That's a disclaimer I want to make. They could do enforcement, and they could do enforcement that's quite rigorous. So it's just to ensure that for you as a business at any given point in time, you basically are then able to demonstrate that, this is the stock I have, this is what I've sold, this is the tax that's due, this is the quantity that I have in place, etc. So in principle, how VAT works is, to Victor's point, there's the input VAT, which is basically the VAT you paid for your purchases. So these are the expenses that you incurred through your suppliers. And then there's output VAT. So output VAT is what you charge on what you sell to your customers, whether it's a service or a good. So typically what happens by 20th of each month is you pay the net amount. Okay, sorry, you pay the net amount to Kerry if your output is higher than your input, meaning that your sales are more than your purchases. Then the claim, I think the question was specifically here on how do you claim VAT. So if your input VAT, so your purchases are more than the sales that you made for that month, then you basically have a credit. Kerry issue with a credit that basically sits within your iTax account and would then be offset through the sales that you make in the future. So it's basically more around the net amount. So if your input is higher than your output, you have a credit, so you can claim that VAT, but it will be offset in subsequent months. If your output VAT is higher than your input VAT, then you basically owe KRA money by the end of day, or basically end of day by the 20th of every following month. So for example, for sales that you've done in July, your VAT for July VAT obligation for July is due by 20th of August, and then so on and so forth.